Hi, welcome to this video today, which is on the 2nd of December, it's Saturday. We're going to be looking at a trade setup today, which is USD JPY. We're going to the chart in a moment. Now, we have covered this pair in a couple of previous videos. We're very bullish of the yen at the moment. I'm bullish of the yen on other currencies as well. I'll cover them in a separate video. Now, in terms of this pair, our first trade was completed. We got 145 pips, which we banked on stop. A little bit disappointed in that. I thought the USD would run on to the downside, but we've now got back in, and I see a low risk, high reward entry for anyone who wants to enter this pair. Now, in terms of the charts, so we're going to them in a moment. Just for new viewers, we're going to be keeping our charting nice and simple. Okay, we're going to be focusing on the really big levels that matter, but we are going to be backing up our view of the technicals with our favorite tool in Forex trading, the COT, Commitment of Traders Report. If you don't know what it is, simply click on the link below this video, join our mailing list, and we'll send more details. But in brief, what we want to do is we want to always be trading with smart money commercials when their positions diverge from large speculators. Now, we'll go to the charts, and just before we do, it is my view as of right now, it can change in line with the market conditions. If you want our full trading techniques and my daily levels on the USD JPY and other major Forex pairs, simply click on the link beneath this video. Now, we're going to start first of all with the COT data, so let's see how that's lining up this week. COT net traders data, and because it's COT data, it's always Japanese, foreign currency first. So Japanese yen v USD. We're obviously going to reverse it round to USD JPY in a moment when we draw our levels. This is a really good visual way of looking at the COT. It comes from COT base. Now, you'll notice I've drawn a line. This is just quickly for new viewers who haven't seen previous videos. Above 100,000 contracts held by the commercials. They're the smart money hedgers. Want to see what they're doing against large speculators. And the 100,000 level is significant. This is a fairly short-term chart. But if you take it back, okay, you'll see whenever the commercials get above 100,000 and the specs drop against them, you get a rally in favour of the commercials. So here, okay, nice rally. This extreme is even bigger. Nice rally. This is the biggest extreme on the chart, which alerted us to going short USD and long the JPY. There goes the JPY up, and then she retraces a bit. We saw that last week. I'm unconcerned by that retracement. I think we should go at least up to here, probably above that peak, okay? This extreme, much bigger than, well, not much bigger, but bigger than this one. That was a nice rally. I think this one's going to be even better. See the commercials drop off or reduce their longs. They're going to do that. They're hedgers, okay? So, you know, they're just moving hedges. They do it here, okay? They're not trying to make any money, okay? So they'll reduce their hedges down as the trend develops. They haven't reduced them enough yet for us to change our view that USD is going down on the JPY. Specs, a few have been hit on stop, but plenty more to be hit. So from my reading of the COT this week, I remain very bullish of the yen. So let's go and draw our levels, and let's go over to the daily chart of USD JPY. Just going to draw my technical levels in a moment. But first of all, just want to discuss the fundamentals. Now, you don't actually have to know them. I've said this in previous videos, but it's good to know them. Of course, you can just trust the commercials, okay, and go with them. But I just think it adds a little bit of confidence to my trading if I know the fundamentals behind the commercials thinking. Now, in terms of the yen bearish fundamentals, they're discounted. Stimulus no end in the near future. It's the biggest stimulus program relative to GDP in history. Interest rate differentials clearly favour the USD. Well, this is now in the price in our view. Just can see it on the chart. USD has already come down off its highs. Now, there is a wild card here for the USD. US tax cuts, saw the announcement of them in the news, just come out. They could be the biggest since the 1980s, so they're going to really push the dollar up on the yen. Personally, I think it's probably pretty discounted by the markets. We'll have to wait and see. Yen bullish fundamentals. It's this first one here. It's very interesting. Last week, Bank of Japan Governor Kuroda expressed concern about reversal interest rates. Now, people see Kuroda as just continuing with this massive stimulus program. He's talking about the dangers of having rates too low. So it's in his mind, okay, about maybe a change to Bank of Japan policy. His deputy governor, Nakaso, also discussed this the week before. Now, if we take where Japan's natural interest rate should be for the 10-year bonds, this is from their own data, it's 1.7%. They're presently holding it at 0. That's a big difference. Okay, now, in terms of the economy, it's picking up steam. Unemployment 3%, GDP up, Tankan report, business conditions is bullish. Okay, so the Japanese economy is finally, picking up steam. Inflation is still low. Okay, Japan is the land of the rising sun, but it hasn't been the land of rising inflation. But now it is starting to pick up a little bit. It's not near target, but it's rising. Now, we all saw what happened when the markets thought the ECB could reduce stimulus. You saw a 1,000 pip rally in the euro. I think we'd get a 1,000 pip rally in the yen easily. And I think the market is just too complacent about Japan keeping stimulus in place and it's open-ended and it's not going to end anytime soon. I think it's going to end pretty soon. We shall see. Right. Final point, risk off is looming. I just feel, with stock markets now, they're just a frenzy. People are buying just because they fear missing out. Okay. Volatility hasn't been that great. It's just complacency. You haven't really seen a big correction. People are just expecting the markets to go on forever. I think when markets get really complacent about something, you've got to start worrying. I think this risk on, it's just an investor mindset at the moment. Nothing can go wrong. Check out Bitcoin, the way that soared higher. Let's face it, it's just a pyramid scheme. It's not backed by anything. People are buying again for fear of missing out. Someone asked me, technically, how do you trade Bitcoin? I have no idea. It's got no worth. It's only worth something at the moment because so many people are bought in. Anyway, right, let's go to the chart. Now let's go up here to the COT extreme we saw when we were looking at the data. Speculators bought heavily into the 114 level. Commercial sell against them. That's the exhaustion candle. And then down we go. It's over a 600 pip decline. We know when the speculators bought up here, this COT extreme is even bigger. Okay, speculators buying, commercial selling against them. We've noted this in previous videos, but just for new viewers, they're trying to force out this 114 level. Take this candle tail out here. This one nearly achieves it. We go back, we have another go. Can't do it. Another go, can't do it. Another go, can't do it. Bang. She does it on that one. No more buyers here at all. Okay. Down she comes. For us, this was a good opportunity for us. We're going to come in at 113.80 and we expect stops to be run. And speculators get taken on stop. Down here, we get a little bit technically oversold, okay? Outside the volatility band, stochastic RSI turning up. We expected a bit of a rally. I just didn't think it would go as far as it did. So we got stopped out at 112.35. So we got 145 pips. Obviously disappointed. I thought the USD would run onto the downside. But we always look for the 20-day moving average to provide resistance once we think a currency pair is going down. So she hits it and comes off it. Okay, she's off her lows, but we've come in at 112.35. There, what we've had is basically failure to penetrate those two candle bodies, that candle tail, and of course the 20. So we're in at 112.35. I'm now looking for the USD to go down. I think if it goes down early next week, she should continue. If you're coming in fresh, where would you want to come in? We got a round number here, okay? So you got a couple of bodies there as well. I'm going to ignore the bottom of that tail there, but I'd say if you want to come in through 111.70. Just get clear of the round number battle. There's always a lot of orders around that clash, and just see, if the bulls or bears win. If the bears win, short is in order in my view. Where are we going? We are going down towards the 108 level. If you look on the weekly chart, it's also the bottom of the recent channel. I then personally think we could go down to 104, then possibly the par level. We get a bit of risk off. Now, in terms of if you come in, where do you want to put your stop? You want it back from here, really. I don't like my stops too close, as everyone knows. I want to be back beyond the next round number, which is going to be 113, obviously. And I'll stop 113.65. So I'm giving it a little bit of room and see if she runs. If she gets down, towards lows and breaks, and obviously you can trail your stop down. Obviously you can follow my levels in the member center, but for me now, I just feel that if we go down next week, we should follow through to the downside. So we'll see how we go with this one. That is my video for today. Thank you very much for watching me as usual. Take care. Have a good day.